So thank you so much for agreeing to this. I think this is such an amazing opportunity to be able to do this live and cover this subject, especially this year where we have just taken the initiative to really just try to get as many resources and as much funding into our community streamline as easily as possible. So we rolled out the Our Stop Shop Lighthouse grant this year. And so the awesome part about rolling it out is like, yes, we have to slap some money in our businesses, but it does require for businesses to pitch themselves. So when I seen you just giving really, really great pointers, like kind of just preparing people to figure out how to structure their business or how to structure their pitch to prepare for funding, I was like, oh yes, they need to hear all the gems, all of them. Let's start it off that way.
Absolutely. See, the number one misconception I would say is people think pitching for investing is like going on Shark Tank. And it is not like Shark Tank. Shark Tank is for edutainment purposes only. So educational and entertainment. They do make some investments, but a lot of that is for show in dramatics. And you can't just walk up and someone say, hey, I'll give you 3% of my company for $2 million. That doesn't work. And a lot of people just don't know how to pitch. And I think it's because we don't have the same, well, I hate to say we don't have the same kind of access, because then that would be downplaying like Harlem Ventures, Harlem Capital, Arlen's Backstage Capital, and all these other funds that are starting to pop up out there. But we don't have as big of a playing field as our white counterparts. So that's safe to say it that way. Yeah, because we do, like I said, I don't want to, the Founders Fund and all those other great funding sources that they're out there for people of color. But I think that we still are at a deficit. Our people of color are at a deficit when it comes to knowing how to prepare yourself to pitch for money. It's not a bank loan. It's not the same as going out for a grant. But when you're going for investment dollars, it's a whole other playing field. So hopefully I can shed some light on some of that today.
Oh, you just don't know. I got my whole notebook out. And I need to make sure not to leave our Instagram folks high and dry. So I just realized I need to share that link one more time.
Yeah, absolutely. And actually, I probably should share it on mine as well,
because I think that is going to be so amazing. And even for us, we really want to get to a place. We did a mastermind right before the end of the year. And so this is why I love this so much. So at the end of the year, we did an invite only mastermind with about 30 Black entrepreneurs. And even a bonus entrepreneur that just stumbled upon it. And I was just like, oh yes, girl, you need to stay. And the interesting thing about it is, one of the things we really wanted to do in preparation for the new year was like, well, what do you feel like your business need? What is your business looking for? What are you seeking? And a couple of the entrepreneurs did say, oh, I'm seeking to find investors, maybe not for their business that we knew them for, but for another endeavor and things of that nature. And so it's great to say, it's harder to understand what's required to position yourself for it. Because sometimes it's a whole lot of money in the room, but you just don't know how to get access to it because you don't understand how it works or what verbiage to use or what things you need to be able to clearly communicate about your business. So
right,
I'm excited about this, and I definitely got my notepad out, and I'm like, yes, every little thing that I could possibly do to make this something where I don't just personally benefit from it, but our business community can benefit from it. Because sometimes people will attend our expos and events looking for stuff to invest in. We had a couple of people make strategic partnerships at our last event where they were like, oh, I'd be interested in investing in you franchising this, or I'd be interested in, you entering new markets with this initiative you're talking about. And so it made my day, but I was like, oh, well, are you prepared for that? And you don't know what you don't know. So
Absolutely. And the thing about it is, I love when there's more events like this and more groups like this that are trying to get the word out there, because people tend, and it's not color specific or gender specific, but people tend to hoard information and they want to hold on to it because they feel like if I give this little bit of information, then it's going to take away from my pot and then everybody else is going to get over me. That's not what this is about. And that's why I love what you do with this initiative. So I'm happy to chime in and give my 3 cents, my 3.5 cents.
I love it. Yeah, it's so funny that you said it exactly like that. That's kind of where our stance is. To echo business over breakfast, they say no stingy energy. And honestly, I'm like, look, you're supposed to be a funnel, not a cup. Everything you receive, all the information, it's not always for you. Sometimes it's literally with the person who's still just kind of letting that little idea, that goal, that dream marinate, actually needs to be able to pull the trigger. Right. But you so worried about, well, let me figure out how I'm gonna use it. And it's like, it may not even apply to your situation. But the fact that you are trying to be a cup and make sure whatever you get stays full, filling it up, it's just like you're overflowing and you're just letting all this waste happen, all this information be wasted, all this opportunity, all these endeavors. There's only so much time in a day. There's only so much you as a individual can tangibly do, even if it is to your benefit. You know, like I cannot be a tycoon of every industry. It's just not enough time in the day, not enough years in my lifespan to master and just dominate everything, because they all require an extent of you that is going to just stretch you too thin.
Yeah. I mean, and I do benefit from a lot of things because I put myself out there and I get into the different circles to make sure that I make myself available and to soak up that information. But I look at myself as kind of like, yeah, I benefit, but I'm also a pass through for a lot of things. So a lot of things that I learn or that come to me may not be applicable to me, but it could help the next person, the next business owner down the street, or the next person in another state. So I always try to, especially with the Mobile Chicks brand, I always try to make sure that we all can eat. You know, I was just saying it the other day, like, it's not just about me. It's not just about the brand. It's about, if I have something going on, it's like, okay, so how can I get other people to be a part of that so they can eat too? So, and I think that we as a community need to be focused more on that and less on scarcity mindset. So yeah, so, but I'm willing to start answering questions about how to get in angel investing or VC investing. I can talk about how to become an angel investor or a VC, because that's another part of the circle. I mean, we look at getting funding, but that's just getting us midway through the cycle. I look at it as a full cycle when you're able to get to a position with your business where you're making enough money, where you can turn around then become an investor and invest in other people's business to bring it full circle. So I'm 360.
Love it. Okay, so let's start from the beginning. At what phase does considering having angel investors come into your business make sense?
Okay, so when you get to a point where you know that you're going to need funding to expand or grow your company, not just add a couple of employees or do marketing so you can get more clients, but you're really physically ready to grow to the next level with your company. Like, let's say, for example, you are a hairstylist and you do freelance work right now and you're looking to start your own salon. Well, you've already laid the groundwork to start getting your salon. You already have all the numbers in place. You already know what your manpower is going to look like. You know what it's going to cost to run this place. You probably have a place in mind that you want to go ahead and secure. But now you have to think about, okay, so how do I get from it's just been me all this time to now I want to grow a company. Now I want to have a full-on salon. And I'm just using a salon as one example. There's a myriad of examples out there. Another example I could use is maybe a cosmetics line, beauty line. You've been doing everything in-house, but you're ready to take on bigger orders or maybe get on store shelves, and you need that manufacturing facility. So you need to be able to find the funds to be able to engage a manufacturer and be able to distribute more comfortably to stores or independent sellers or whatever you want to do. Those are some of the key indicators to say, hey, it's ready. I'm ready to take on investors now. You also need to be at a point where you've passed the friends and family round. And let me say something about the friends and family round. Me personally, I grew up in the projects, okay, in New York, in the Bronx. we didn't have friends and family rounds. Okay. So friends and family round came from yourself, maybe your sister or your brother, but that's about it. Or maybe your parents if they'd saved up some money. But traditionally, we didn't have friends and family rounds. We didn't have legacy, Harvard alum and people that we knew that we went to school with that we could say, hey, I'm starting this business. Can you give me some money? We don't traditionally come from that background. So when I say friends and family round, that's when you have exhausted every personal option to find money. And yes, some people are going to hate me for saying this, but yes, even including bank loans and grants. You're beyond that phase. So now it's like you've tapped into all of those resources. Now you're ready for a little bit bigger. An angel investor is someone who will put maybe $10,000 to up to maybe $100,000 in funds into a company, more so on the lower side than the higher side. And with angels, usually you find them in groups. You very rarely find someone who's a private angel investor that'll say, hey, I allocate X amount of dollars per year to different investments. Most of them move in groups. So then you can be a little bit more flexible and get maybe up to $150,000, maybe $200,000 from an angel investment group. But you would have to research these groups and find out, do they deal with my industry? So it wouldn't make sense to go to someone who funds food businesses and you have a beauty line, or you have a clothing line, or you have an engineering company. So you always need to look for investors that are within your industry, that invest within your industry, and doesn't stop there. Once you sit down, you have your numbers secure, you figure out what you want to do with the business, how you see it growing, because investors are not loans. They don't loan money. They put money in because they want their money back and then some. They want to know what's in it for me, what's the return on my investment. So you would sit down with them, and this is where it's kind of like, I tell people it's like a marriage. So it's like courting in the beginning. You sit down, you talk to an angel or an angel group, find out what their guidelines are, find out what they're looking to invest in, what stipulations they have, what advisory they give you, because it's not just, and a lot of people make this mistake. They think, oh, I'm just going to get the check and that's it. And then when I make a good amount of money, I can pay that back, or, give them their investment back plus some. No, investors should always be willing to give their advisory, their counsel to the businesses. So you're not just getting a check, you're getting a check and you're getting advice. You're getting kind of like a built-in advisory board. So you have to make sure that the personalities are fit. You have to make sure that you're able to take direction and that you're coachable, because if I'm writing you a $150,000 check and I see some areas where you can improve with the business, not take over your business, but to improve the business, I want to know that you are open and flexible enough to take those suggestions and move with them. If they, after all the analysis, they fit into what you're doing, fine. If they don't, fine, we move on to another, set of advice that you can get from the company. But you have to be coachable and you have to be willing to accept help from the advisors. Now, it's not like you're going to get on the phone with them every day and say, hey, Tom, I have an issue today, or hey, Linda, I have this issue, whatever. No, they're going to be overseeing high level what's going on with your business. And you have to be very transparent, number one, and open and receptive to hearing what they have to say. So I kind of jumped ahead with all of that, but these are things you have to take into consideration when you're thinking about getting investment dollars, because it is a relationship. It's a long-term relationship until either one of two things happen. Either one, the company does very well and you make all this money and there's an exit, or I hate to say it, the company fails and that's the end of that, the door's closed. So we want for the former, not the latter.
Oh, I love that. I love that you said be very transparent, because a lot of people treat, especially when you're talking about small businesses, getting to a place where they prepare to even be receptive of anybody contributing. They treat their business as their baby.
Yeah.
And, nature kind of forces you to have to let your baby grow and evolve with time. But I feel like I meet a lot of people who is just like, they want to micromanage and want to look over and want to double check, or they don't want to let this part go because they're worried somebody else isn't going to give it the same level of detail or effort or stuff like that as themselves. So I love the fact that you said be transparent.
Yeah.
And that's where it stops being, but it's also amazing where VC investors don't come in until after banks have already come in. right? So the banks have already made you have to show sales and revenue and all this stuff. And at the grant level, it can be one or the other. It can be sometimes they're like, show me proof of concept or stuff. And sometimes just like, oh, it's a grant because of this. And so the free money has come. You've already had to get a level of awareness about your business model just to get the bank funding. So by the time the VC comes down, it's like, all right, you got to just get nitty gritty with it. Now, realistically, how long from beginning to end in the process of getting your first investor would that timeline be?
That depends on the business. So I'll give you best and worst case scenarios. So maybe worst case scenarios first. I've been approached by people that say, hey, I have this excellent idea. We're going to be the next insert company here, killer, next Facebook killer, next Uber killer, next Airbnb killer, whatever it is. And they'll have it so ingrained in their business, in their minds, that their business is, this is hot. It can't fail. This is a great thing because they're personally invested in it, but they haven't shown proof of concept. They haven't shown customer traction. They haven't shown any profitability. Heck, they haven't even shown sales yet. And in that case, there's no track record. So an investor is going to be like, okay, again, what's in it for me? Why am I going to invest in your business? And at this point, I've seen some entrepreneurs get offended by that question because they're like, why can't they see this vision? Why can't they see this is a great thing. This has such potential. And they get upset. And you see it, and I hate to default to it. You see it on Shark Tank too. And they're like, oh, well, they just didn't see my vision. Those kind of people, those are the worst case scenario. They take way longer because number one, they still don't get it yet that it isn't about them. It's about what the business can do for the investor. It's about the return on the investment. It's about how much they see any promise in this business. So until that person gets to a point where they're like, okay, let me get all my ducks in a row. Let me make sure I have all my numbers right. Make sure I have all of my, my pitch deck right. That's going to take a long time. Now, the best case scenario I've seen is someone who has their pitch nailed down. They have all their numbers. Again, what we talked about, transparency, everything out in the open. They make their pitch and then investors are like, oh, I see this. I see where this is going. I see where we can make money. And they'll write a check instantly. Okay, let me not say instantly, barring any issues, because they have to have that due diligence period. And I know that some people, they go anywhere from 2 weeks to a month for due diligence to do their research on the company. So let's say a month is about maybe the quickest you could probably get an investment from an angel investor, providing everybody, if you're doing it with a group, providing everybody's in agreement, they see the promise, they see the potential, and they see the numbers, and they see the future projections for the company. But the people who are just, I have this idea, or my business needs money, that's the other thing. Why does the company need money? Now, this is another worst case scenario. If you're in a business where you're bleeding money, like every week, you're just really like what they call the burn rate is going really fast. An investor's going to think twice about giving you money, because it's like, if you're burning through money this fast, what is my check going to do for you? Are you going to burn through that as quick as you did the other money? So it really depends on how well you have your stuff together as a business owner, and how you present yourself and you present your transparency of your business to the investors. So I can't give a definitive number.
But you said as short as a month.
Yeah.
That gives people hope. But on the long end, like this could take a month. It's dependent on the entrepreneur, because a lot of people can be stubborn, especially when, like you mentioned before, people are so like, that's their baby, their business is their baby, so they're not going to look at it from a business perspective. Yeah, my businesses are all my babies to an extent, but business is business for me. I'm looking at the dollars and the cents. If it makes dollars, it makes sense for me. But a lot of people are like, I put my blood, sweat, and tears in this, and they don't understand how hard I've worked. Investors don't care about that. Exactly. They want to know, how do you make money, and how will I make my money back, and when will I get my money back? That's what they care about. So all the other stuff is secondary. Facts. And I feel like that it translates on the lower levels, but when it gets to a lot more money, it doesn't translate as well, right? Like we host these large business trade shows. Like you're thinking about the little amount you paid as a vendor to get in. You're like, did I make this? Or did I make 3 times the amount I paid? Or did I make 2? Like, you have a number in your head
Right.
that you want to see as a return for the fact that you paid this fee. However, when it's like you're now asking for somebody's money, you're like, you should be understanding of the process. Like, and it's like, no.
They don't care about your feelings or your process.
So I love that. So in a situation like Amazon, which is like super huge at this point, right? Jeff Bezos, I cannot quote it correctly right now because it was like 3 weeks ago where Jeff Bezos talked about how much he raised in seed money just to prepare to make Amazon. Because when Amazon first started, we all know Amazon was just trying to be a better Barnes and Nobles. Yep. Amazon was not trying to be none of this that it is right now. And so he talked about the fact that he raised a lot of capital at the beginning. And I'm not sure if that was before or after he actually had a tangible software even in place for it. That's back when it was Amazon.com, not even like Amazon the way we know it today. And then I remember, this was years ago, but I remember hearing about the guy who was the DJ for Facebook's like pre-release party in New York or something. And Mark Zuckerberg, this is before it was anywhere remotely close to going public, but Mark Zuckerberg offered him an equity share of the company just to DJ the like pre-release of the software party. And so that dude, I think he sold a lot of it fairly early on, but like just the share that he was given was like worth maybe 2-3 years ago, it was worth like 170 million or something. Just to share, that what it equated to. So
but see, here's the thing, before you ask your question, I don't know if it's fair to use those two. Well, I don't know if it's fair to use those two as examples because of the behemoths they become today, we know. But the thing about it is, and I can't say much about Mark Zuckerberg, but for Bezos, he had a vision for Amazon beyond books. So I could see him getting the money from investors early on, as opposed to Zuckerberg, where the people he was going to were not familiar with the social media space or the internet space. It was like kind of a shot in the dark kind of thing. Let's see if we're gonna gamble on this kid. But with Bezos, they were unprofitable for like the first maybe 10 years, 15 years of existence. They didn't make they were in the red. And I know this because I did a paper on them a couple of years ago in my business class, but yeah, they were in the red. But I think because Bezos is such a visionary and he saw it being, this is not just a marketplace. This is a lifestyle. And everything you go now, what do? You go on your phone, like, let me look it up on Amazon, whatever it is, whether it's prescriptions or dress or music or whatever it is. He had this vision. Now, who knew he would go into Amazon Prime Videos and things like that? I mean, when you have a product, and Amazon was the product, when you have a product like that, I think that the better you can articulate the forward-thinking vision, the more likely investors will be like, okay, let me take a gamble on this one. I think this one has promise, as opposed to saying, we're the next Uber or we're the next Facebook. You're not really establishing your foothold in something, because all of those companies were revolutionary. Uber, just driving people around, and now it's global. Airbnb, look at where that is today. Amazon, look where that is today. And for a lesser extent, look at even, I don't know if it's fair, Elon Musk, when he started PayPal. People were like, give my payment information to what? I'm not doing that on the internet. But
Elon Musk is behind PayPal?
Yeah, Elon Musk is behind PayPal. What? He sold PayPal, and that's how he got the money to start Tesla. So yeah.
Why did I not know that?
Yes, girl, I know everything has to do with money.
I was ride or die PayPal for like pretty much since like
beginning.
Early, like end of middle school, high school. So that is wow. And I used to swear, Wow.
Yeah. Now, no offense, Elon Musk, he don't own it anymore, but I don't use PayPal anymore. I have it as a backup.
Yeah,
but yeah, like
they lost
companies.
our business last year, and now we use payment. But
exactly. So, but
but
it
I
just
didn't know
speaks
that.
to,
That's my
yeah, he did. But it just speaks to the fact that when you think about approaching an investor, you got to look at the long game. You can't look at it, I need a cash infusion now. You can't look at it like, I see, well, I have the potential to go big. No, you have to be able to articulate this long-term vision to get people, they have to be excited about what you're bringing to them. It can't just be another Me Too kind of company. Like, oh, well, if this company is doing this, why would I want to invest in this one when this one's already doing it? So there's a lot that goes into that mindset of how an investor looks at your actual business as a potential investment. So
that is so awesome. Now, how do you, so in those situations, right, we're not gonna necessarily talk Facebook, Amazon, those things specifically, but I feel like those are more intellectual property, and almost patented ideas, right? Like, prime example. So vending machines have been around all my life. I can't think of a time that vending machines didn't exist. However, what somebody did was they created a vending machine card reader to allow for the processing of not even just regular card readers, right? They created a card reader that allow for you to process EBT and SNAP card payments, right? Which is a completely different infrastructure. And they were able to patent that. So in a situation like that, where technically it's going to require some time and its own red tape because of the logistics and blah, blah, blah of the government, how do you, in a situation like that, is that something capable of being invested in?
Well, yeah, in my opinion, as an investor, I would say yes, and I'll tell you why. Because just as many vending machines that are out there is as many opportunities as you have to convert those machines over to your new process. And not only that, any new vending machines coming out, you have the ability to license that technology to the makers of the vending machines. So I see multiple ways that the person can do it. You can have it where you can get in with the vending machine manufacturers, and you can get in with the companies that own vending machines. So you have two different clientele that you're dealing with. And yeah, there is red tape with EBT and all of that, but you're getting paid. It's kind of like, for that example, I would use, maybe if you say had a medical office, as opposed to just accepting insurance and private paying patients, yeah, you're going to take Medicaid patients because you're going to get paid. See, and that's something that's attractive to an investor, because if there's something where you're guaranteed that customers are going to be paying you, heck yeah. The airport, we was at the airport a couple of months ago, and I was trying to get $1 to put into the vending machine, and I got mad because the other one, the card reader, wasn't working. Obviously, it's not the person that you're talking about, but card reader wasn't working. But I'm running through the airport trying to hurry up before my flight boards to get dollars so I can put it in the machine. Somebody like me would have been like, oh shoot, if he had that, well, I could have just tapped my card or did Apple Pay or whatever. So whoever licensed that technology, they about to be a billionaire, because it's it's limitless, and it's a global thing. You can do it globally.
Yeah, because because it's EBT for the US doesn't mean its own renditions of it worldwide. Granted. And so it does give you that scalability to just kind of evolve it and allow for it to progress into.
Absolutely. And another one, I'll throw one about vending machines. There was a young lady, I made a joke about it. When you travel with little kids, you forget maybe your diapers, you forget, whatever.
I already know
whatever. You know what I'm talking about? The lady in Florida.
Yeah, with literally the mommy vending machine.
Yes,
everything baby related. And I said that would make a killing. And I'm gonna tell you why. Because when Sam was a baby, like a toddler, that age where you couldn't really explain to a little girl, don't sit on the seat. I bought the toilet seats, like the foldable toilet seat covers, to sit on the public toilet seats. And so I was like, if it was something like that I could have just grabbed wherever, like, you know what I'm saying? It's those little things where it's just like, Yes. That would have been game changer for me.
Yeah.
So I, hands down, I definitely feel like you are spot on with that. I guess my thing is like, at what levels, because I realize everybody isn't going to be at the, okay, I'm scaling. Some people are going to be at, this idea would have changed things even for me. So I'm pretty sure it's beneficial to others. Like, I remember, full disclosure, I was homeless for a period of time early in momhood and stuff. And I remember there was a period of time where I was living out of my car. And this was before I ever seen an outlet in a car. And so my thought was, they need to start putting outlets in cars, because at least I would have been able to do something in here. You know what I'm saying? And then lo and behold, my car now has an outlet, legit outlet. And so and it's like a industry standard to some extent. And so granted, somebody had to think that. Like the technology, whoever created the outlets or power, blah, 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 like that's one person, but for it to exist in the infrastructure of vehicles, I assume that is its own patented idea, possibly. And so in that area, I guess, when as a VC investor or an angel investor, do you have the capacity to even consider investing in stuff? Is it after the person has a prototype, or is it after the person just possesses maybe the patent or patent pending status for the idea? Right. Or once it's actually implemented?
Well, it could be any of those. So again, if you have investors that see the vision and understands this is going to be a game changer, this is something that can potentially become a way of life, they're going to, before you even have your first prototype, they're going to throw money at you. If it's something that's game changing. See, that's why I can't give definitive answers about, at this stage, they'll say yes. At this stage, they'll say no. For the most part. Now, let me differentiate what you're talking about, something like that, or something that can be patented, or something that can possibly change lives. Heck yeah, you can get investment as soon as early as they're hearing the idea. But if you're, and please, guys, if y'all are listening, don't get offended by what I'm about to say. But if you have a gift basket business and you're like, oh, well, I'm going to change the way that I sell cookies, that is not something that an investor is looking at, because that's like a novelty. So if it's an idea that's a novelty, I'm not saying gift basket, so please don't send me hate mail. Not saying that that's that, but if it's a novelty idea, more times than not, you're not going to get investment dollars. If it's something where they see potential, like what you were talking about as far as outlets, or what I was talking about with the lady with the baby vending machine thingies, anything that they feel is going to enhance life, add to life, make life easier, and they see the potential. Even if you came to them and you had it on a napkin, because there's a lot of, let's just be real about it, and to people who are listening to me who might be white, we have a lot of mediocre young white boys out there that will sketch something out on a napkin. Listen, this is my idea. This is what I want to present to you, and they get money thrown at them. I've seen the dumbest stuff. I was getting ready to curse. The dumbest stuff I've seen get funded, but that's when they're funding people that look like them. Okay. But when it comes to us, we have to be twice as on point. We have to be 10 times more prepared, and we have to be certain and be able to articulate the value of what this company or service or product that we're trying to get funding for is going to do for the world. I had a friend, hopefully he's watching now. Hey, Amos, but he started a company called CyberSync simply because he was jogging one day. He did a lot of music work and kept everything on his iPhone. His iPhone died and crashed. Hence CyberSync, and that's how he started, and other companies started to do data syncing and data mine, so that you could save your data and back up your data. Yeah. So Black-owned company, Amos Winbush III, look him up. But stuff like that. When he went to investors, it was like, look, I lost all my stuff, and I lost all my files and everything, and this little technology is able to do that. And he's doing deals in Africa and everything right now. So I mean, it depends on what the product or service is and how it will impact and revolutionize people's lives. So I hope that answers your question.
Yes, it does. So in the sense of the return on investment, right? So typically you're not investing based on full value of the company. Like, what percentage is the max when angel investors are first considering?
Okay.
What percentage of either based on the current value or based on how do they assess the dollar value they'll invest, and the percentage take away from it?
Gotcha. So I can only speak for me. If something's not going to net me at least a 20% return on my investment, sometimes if I see the long game, like I want to be invested along, like throughout the life cycle of this company, and I see an exit on the horizon, maybe I'll do 10%, but I need a 20% return on my money. Because, and I say that, and I know that sounds high to a lot of people. I'll tell you why I say it. Because if I'm writing a check, I know no banks are going to give me that kind of interest, but I have to keep the companies that I invest in accountable, because if they go under, and that has happened to me, where I've invested in companies and I've lost my money. You know, that's part of the game. When you become an investor, you got to be willing to invest money that you know you won't see for a while, or that may not be returned to you at all. I've lost money. So I say, if this idea, do I think it'll generate a 20% return for me, and I can clearly see that in the numbers, then yeah, I'm all for it. I can't speak to what other investors, what their threshold is. In terms of the amount of money of funding, I don't look at that like how they do on Shark Tank. I'll give you 3% of my company for $5 million. First of all, valuations are always inflated on companies. Nobody ever gives a real valuation of what their company really is worth. You can't come into a company saying, I did $50,000 worth of sales last year and my company's worth $2 million. It does not work like that. The numbers don't lie. Numbers never lie. If you see that this company has a struggling track record of making money, why would an investor put money into that? Because a lot of the rationale for people looking for investing is say, if I only had X amount of dollars, I can get back on track. If I only had them give me this amount of money, I can make a lot of money. If you can't learn how to make it do what it do with what you got, no amount of money is going to help you be able to get over that hump, because it's going to be, like I said, burn rate. The money's always just going to keep burning through. And I'm not in the business of giving my money and writing checks to let it get thrown. For that, I could just go and throw the money in the garbage. So the best thing to do is first be transparent with your sales. If you're a brand new company, be conservative what you think your projected sales for the current year and the next year is going to be. Don't try to impress them and say, well, we could do $3 million in 2 years, because they'll see through that. Investors will see through that. It's basic math. If they start looking at what your cost of acquisition, how much is it costing you to get customers? How much is it costing you to produce products and services? How much is it costing for your distribution? All of that stuff. What are your expenses, your underlying and your top line expenses? If all of that is greater than what you're actually grossing, then we have a problem. There's something there that's not adding up. So, but now if you turn around and first year you made $100,000 in sales, and next year you made $750,000 a year, and I'm seeing a track record, then yeah, that's going to pique my interest. And most investors too. It's like, oh, well, they did this year, then they did this year, and they're on projection to make more money this year. So wait, let's see what the secret sauce is. Let's see if this is if it's gonna be sustainable. That's what you have to prove, sustainability. If you don't have sustainability that you can grow the sales over time, they're not gonna be interested in it, and they're not gonna want to invest their money. So
now I love the fact that you gave the 20% return on investment. Over what time?
I give it 5 years. Yeah. Me personally, I give it 5 years. Some companies, now VCs are a little bit more cutthroat. Some of them, they want their money within 24 months. They want to see a return on their investment in 24 months. Some will want to see some kind of progress, like a kind of a growth over 24 months. And then they want eventually have an exit. That's the other thing. You have to find out, when you're looking for investors, what would they like to see as the exit? Because investors are not lifetime. Most of them are not lifetime. Everybody that got into Facebook in the very beginning, they have gotten their money and gotten out. Some maybe have reinvested in, but most of those people that invested in the beginning, they're out already. So you have to find out what's the exit. What are you looking for as your exit strategy? Me, with smaller companies, 5 years is a good amount of time for me to let that money kind of marinate, and also to give them the traction that they need to grow and scale and do what they need to do and meet their goals. You also, as an investor, I'm talking from the investor side now, is you have checkpoints with them to make sure that there's no surprises with the business. Again, back to transparency. Set up quarterly meetings with your investors to let them know. Some investors don't care. They just want to meet maybe annually. But for the most part, I would say on the safe side is set up a quarterly meeting with your investors and say, even if you're struggling, and even if you've gone in the hole, they need to understand that, and they need to know why. So that way, maybe somebody from their team can come on and say, okay, this is where the holes are. This is where the bottleneck is happening, or this is where there's a disconnect happening. It's good to speak with these investors, with your investors, to let them have a bird's eye view of what's going on with the company. Do you have to share every single daily detail with them? No, but the important stuff, absolutely. Because here's the thing, the more transparent you are with your investors, as you're growing more and as you need more money for good reasons, they'll be your first people to go back to. They'll be the ones that say, okay, well, they've been doing good so far. Let me write another check for them and give them another check. You know, not all of them, but some of them do that. So always be completely honest and transparent with your investors, even in times of struggle.
That is so dope. So ultimately, because I want to make sure I understand it right. So in this example, 5 years, so you've given in $100,000. At the end of that 5 years, you expect to see
$120,000 back.
So ultimately, 120% return.
Your 100% and then your 20% interest. Investors want their money back.
Exactly.
And interest. So that 20%, I want my $100,000 back, but I also want.
So that's 20%. Not really that bad. So ultimately,
right.
If they're making the progress where there's at least a 4% excess every year, then it's realistic that you can consider.
Yeah, because you got to look at the year over year return that you're getting.
Now, typically, how many years for an existing company, not necessarily somebody that has just like some really for an existing company, how many years of pre-existing establishment or track record or just track record is probably the best. How many years do they need to already have for you to be able to assess it thoroughly?
Okay, so it depends on the round that you're going. Seed round, that's always like the very beginning after friends and family. Seed round could be zero sales to maybe 250, I would say, in sales that you do. For someone who's a little bit more established, I'm looking at their past 3 years that they're doing. That's maybe Series A. So you have seed round, you have Series A, B, C, sometimes D. B, C, and D is when you're talking about the bigger money, like private equity and all those bigger companies that are coming in there to like keep the company going. But Series A is that first round after seed funding that you would be going for. Series A are for more, if you've already been established. Series A is, you're not going to, if you just have an idea, you're not getting Series A funding. That's just not it. Series A, they see the potential, they see there's some traction, they see you have some customers, maybe you need some tweaks, and they see that you have the possibility, the potential to make more money. So those are a little bit more bigger, lofty checks, I would say. Series A, seed funding is like if you're doing $50,000 to maybe $100,000, $250,000 infusion investment. But like when you start talking about $1 million investment and things like that, that's usually more so to Series A. Now, there's no rule if you're just starting that you can't get seed funding from different investors. You can do that because I've seen people do that. They've gotten from different investors. Some investors partnered and go in, but keep in mind, the more people that you get to invest in your business, the more equity you're giving up in your business. So if you're saying I'm going to 4 different venture capital angel investors, each of them want 10%, you're giving up 40% of your business. So you got to be real mindful of how you get into this dance. Do I want to stick with one investor or one group of investors and work with that amount of money? Or do I want to have the maximum amount of money and give up possibly the maximum amount of percentages of my business? And when you go to the next Series A round, those VC rounds of money, they're going to look at who has already invested in your business. If they see that you've already gotten money from 5 different angel investors, you're obligated to 5 different people to pay back. So it's like, what's the incentive for me as Mr. VC or Miss VC to want to give you money if you already owe 5 other people investment money? See what I'm saying? So you got to be real careful with how you take money, how often you take money, who you take it from, and the amount that you're taking, and how much you have to give up in equity stake. So I know that kind of veered off your question, but
no, that was really important. Good. And that actually triggered my next one. So you talked about the return you'll like to see. More often than not, when people are thinking about the returns, ultimately you're thinking 5 years. I gave you 100,000, 120,000 back. We good. But I've also heard people be paid in perpetuity, where it's like off of the actual sale or contract per transact, like almost transactional. So what is, and some of those, it may be a smaller equity stake. Sometimes it's just straight perpetuity. Like, so what angel investing structure works best for a business that's doing it for scaling,
right?
Or I want to ask you for 2 different things, because I like the fact that we were talking about that prototype, the card reader EBT prototype. So what infrastructure is best for somebody kind of with something tangible where it's like I own the intellectual property or patents, versus this is what I'm generating in sales from this pre-existing business. Right.
Okay. So you mean someone who has developed a prototype and has the patent in process, but maybe may not have made a sale yet?
Exactly. So which structure is best?
Well,
for investors.
So here's the thing. And when I said the 20%, I was talking about the return on my investment that I was looking for. That's not the equity stake that I'm taking in a company. So I should have said that. So you have angels that will take anywhere from maybe 3% up to maybe 15% equity stake in the company. Now, in that money, that's how you determine the valuation. So if I'm giving you, let's just give real easy numbers here. If I'm giving you $50,000 for a 10% stake in your business, that's a $500,000 valuation, right? So that's what we're valuing. We're saying that this is what the value of your company is. So you have that equity stake. I'm giving you $50,000. Me as a personal investor, at the end of whatever term we set, like I want my exit in 5 years. I want to see my $50,000 plus 20% of $50,000. That's another $10,000. Yeah, $10,000, right? So that's $60,000 when I buy. I'm just using easy round numbers, low numbers here to go. So that's for everybody who might not be following this. So that's what I'm looking for at that percent. If I'm taking 10% stake of the company. So what you're going to do is you're going to sit down and figure out, does my product, service, business have the potential to make this long term? Because you don't want to overpromise an investor, say, well, this has the potential to make da 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 da, and then here we are in year 3 and you still are in the red or in the negative. How is this investor going to get any of their money? How are they going to get any equity? How are they going to, I'm owning 10% of 0. See what I'm saying? Because you haven't made any money. Now, some companies may surprise you, and in that 5th year, they might take off or whatever. But that's why it's important, again, to look at the history of the company, history of the person, look at the track record, and stay in touch with the investors to let them know what's going on in your business throughout this whole time that you are in this marriage with them. So did I answer your question? Hope I answered your question.
So ultimately,
no, percentage stakes. You said percentage, correct?
So how, I was asking, how do you determine how to structure? Because you talked about the return on investment, but you also talked about the equity. So ultimately, the equity is going to be, you're going to get your return, your initial investment at whatever that deadline is, and then you're still going to hold this equity. Right. So ultimately,
you still have an ownership of that percentage. That money is your percentage of the business. whatever you've given them. Now, here's the thing. Your agreement can be structured anyway. It can be structured as a partial loan. It can be structured as a full investment. It can be structured as a full loan. It can be structured as a loan plus, like you said, perpetuity. I get X amount per sale, however long. I hate perpetuity deals because as a capitalist, I love money. And yes, that would be beneficial to me, but it seems predatory to me when investors say that they want that in perpetuity. And the one I have in mind, and I hope that if and when he see this, yes, he don't come at me because I have a mouth too. But that's so predatory when you say, well, in perpetuity, that means forever, for the lifetime of the company. Do you want to give away a piece of your each sale for the lifetime of your company? So you have to, when you're structuring a deal with an investor, you don't have to accept the first offer they give you. And a basic example I can give you is, let's look at Shark Tank. Even though I said it's entertainment, you got an opportunity to counter. You may say, I want 15% for $50,000 for my business. And they may come back and say, well, I want 50% for $50,000 of your business. They just slash the valuation of your company. You don't have to accept that. You can negotiate. You can do what feels right for you. Some people feel like, well, I'd rather do a loan because at least I know what the loan is. An interest-free loan as a percentage of the investment that gets paid off. And then they don't have any ownership in my business anymore. See what I'm saying? So you can structure your investment with the investor any way you want to do it. It's just, I think we see these things like Shark Tank or whatever, or watch pitch shows and all this other stuff and think that we're locked in is whatever the investor gives us, that's what we have to accept. No, you can structure an investment deal any way you want to. That's between you and that investor. As long as you both agree and sign off on it, you can structure it any way you want. It could be straight out equity. It could be a loan. It could be loan plus equity. It could be a loan, equity, and perpetuity sales. However you want to structure it is up to you and that investor. Just don't get taken advantage of, like Miss Dorr.
I love it, love it, love it. And so, wow, I got a lot of notes. You just don't even know.
Okay. I like that.
This was very, very insightful. I mean, seriously, it was very, very insightful. And what do you feel like is the most valuable thing to be an angel investor in?
To be an angel investor, the most valuable is term is industry, or what do you rephrase the question?
Where it's like, because different angel investors are in different industries, like you said. So do you feel like it's more valuable to be invested in intellectual property where you can always license it or things of that nature, even if sales and revenue don't do well, or in something where you have the ability to at least franchise it, or so softwares, different types of and stuff like that, or just a business that really has the ability to capitalize,
right,
or take a large share of a market?
Well, that's a good question. So the best way I can answer that is intellectual property is always a good thing. If it's something that's they're first in the market, they're best in the market, or they're newer to the market that wipes all the other stuff out the box, that they've come and improved on something. So intellectual property is always good. There are very lucrative food businesses that are out there that people are making money. Like, look at this Impossible, but like I personally have not invested in that stuff, plant-based meat and everything. I have my own opinions about that, but people invested in that, they are getting rich right now. Okay. Then you have the smaller side. Like I look at, and I know most of you probably have seen her on Instagram, Super Scent, the one with the crown case.
That is so funny.
If I had, look, let me tell you something. I saw the lip bar, and it was another cosmetic company, I can't remember what it was, that went on Shark Tank and got turned down and turned out to be great companies, went on and did big things, lip bars in Target and all these other places. If I had run across Super Scent in the very beginning and saw what her plan was and how she jumped on Instagram and made all them sales, hell yeah, I would have invested in her business. So it's hard to say what would have been what's a better investment and what's not. I can tell you what
I feel like, So it's so funny because I'm really not in makeup at all, but that stood out to me immediately that she built a whole makeup collection around the educational theme. The school culture, from the boxes to the crayon boxes to the book bags to the and I was like, that is super clever.
Yeah.
That is super, super clever, and it allows for you to stay in a youthful state of mind, which I think allows for it to transcend generations in its own.
Yeah,
I just learned about her last year, so it's so funny that you mentioned who she was, and I was like, oh, she got reach.
I heard about her in the year. What was it? 2019, I think, is when she did that Instagram live and started selling. And I heard about it. People were like, "Oh, you got to check this out." I'm like, "What?" And I'm looking like, "Oh, okay." So I just kind of like brushed up, and then like a couple of days later, they was like, "Did you know she broke $1 million?" I was like, "Oh, what? $1 million in sales?" Like someone like that, I would have invested in. You know, I mean, I don't know if she's looking for investors. I don't think she's looking for investors, but she's doing enough now where she don't need no investors. I know she has a manufacturing
in that situation.
Yeah.
Are you investing in the product, or are you investing in the brand? Because so I learned about her late, right? But one of my business partners is my cousin, and he is 1,000% in tune with all things social. Anytime I learn about somebody new on social media, he already following them. You understand what I'm saying? Like, so in tune with everybody, where it's like, and so I had a conversation with him after I came across her page, and he was like, well, people seen the involvement. They seen her working at the I believe it was some type of like just low level labor job, restaurant or food industry. I don't really want to mislead, but and they saw that evolvement into from just a hard working, trying to get it out the mud to building a brand, and people seeing her persevere and develop. And so the question is, in that situation, even now, you know, she has the separate pages dedicated to it, but her true following and presence on social media is from her personal page, and you've seen all of the
evolution,
ebbs and flows. You're seeing the relationship involvement, you're seeing the body involvement, just the progression and lifestyle. And so in that, how do you assess whose brand as a person is worth the investment? Because what if it didn't transcend?
Right.
What if people didn't care about the rags to riches story attached to the person, and the product, you know, it kind of flatline because it's so kid themed and school and so youthful, so youthful and thing. So how do you make the decision or assess it where you realize you're not necessarily investing in just a business, but you're investing in the brand attached to the business?
Well, there's a couple of things that investors look at, and what I looked at as well. They look at the founder. That's first and foremost, because if a real founder worth their salt will know what their deficits are, and they'll say, okay, I've gotten it from here to here. I need somebody else to get me from here to here. And they bring on strategic partners, and they bring on people that come onto their team that know more than they do. So I look for founders who are they can lead, they can sell, they can sell me on the vision, and they can have the right people on their team to make sure that the company is running smoothly. So I look at the founder. That's number one. Second thing I look at is what the product or the idea is. Makeup is a multi-billion-dollar industry. So depending on who you get, and full disclosure, I have not used any of her products. I do know people who talking about Super Scent, I know people who use her products and they rave about her products. So I look at what the word of mouth, what people are talking about, looking in the traction. That's a thing for customer traction. There's lots of customer traction because people are evangelizing her products in her different palettes. I look at the addressable market. I mean, like I said, multi-billion-dollar market. There's people always looking for makeup, and there's a lot of people looking for Black-owned makeup companies. So yeah, she checks all those boxes for that. I look for traction. Hello, you did $1 million on a Black Friday. You can sell like that. She's obviously doing something right. Then I look at what's the advantage that she has. What is different? What differentiates her from the rest of the makeup? Because I follow a lot of makeup brands on Instagram. Do I use them all? No. I pay attention to, like you said, how your cousin does, follows who's doing what on social media. How engaged is their audience? She obviously is very engaged with her audience. She's very transparent. I've seen, even when she had her daughter, she took everybody through that process and everything. So I look at the total picture, the total package for her. She's someone that I would have said, yeah, I'll invest in her. Now, conversely, I've seen makeup brands, and I'm not going to name the brand because I did buy, and I don't want to blast them like that, but all they do is shoot out email blasts and text messages. Hey, we have a sale on this. Hey, we have a sale on this. I never see anybody with their product. I never see any demonstrations, any unboxings. I never see anybody rave about her cosmetics. She has maybe a couple of thousand followers, if that much, whereas Super Scent has over a million followers. So, but the difference again is Super Scent is involved. She's bringing you into the day of the life. She's showing you the behind the scenes. She's showing you that she's rolling up her sleeves and she's digging in. That's a founder I can get behind. Not somebody who's just going to shoot off some email blast. Hey, we have a sale, 30% off. Hey, we have this color coming out, da, da, da. But you don't see any, I don't want to say zhuzh behind them or hoopla behind them or whatever. I'm going for the one.
There's none of the know and love.
Yeah.
Like that develops the brand loyalty.
Right. I don't want to know that person's story. Super said, I want to know what the heck she do. Oh, she had a notification. Let me see what she's doing now. Those are the founders that I want to follow. That you got people that are waiting to hear what their next move is, people that are waiting for their next product to come out. The other one that I was talking about is just, here's my stuff. Okay, there's a whole, but you go to Sephora, there's rows and rows of cosmetic. What makes that stand out? Rihanna stands out, but see, we can't use her because she's already a celebrity. So I'm talking about people who would just come up from the bottom. Now they're here. It's not to be Drake like, but you know, Rihanna, of course, she's already was a multimillionaire. So yeah, it makes sense she would do cosmetics. But I want to know, and I'm just saying cosmetics for example, but any product or service. I want to know that there's going to be a buzz. And even if there isn't a buzz, like if Super Scent right now, if she said, I make the best damn toilet paper out here, I'm gonna follow her because I know how she is. I know what her personality is like. And she goes hard to look, this is the best damn toilet paper you ever gonna get. And this is why. Those are the people that I want to invest in. Not people who are demure, not people who are like, well, here we have this and that's that. I want to see some pop behind a brand before I decide this is a brand that I want to invest in. And again, only speaking for myself, I can't speak for other investors. So I say to round that out is look for the traction, look for the hype behind the person, look for the involvement of the person and how they pretty much represent the brand. She represents her brand 24/7. She believes in her brand. Therefore, other people believe in her brand. So I can get behind her brand and I would throw money behind her brand. And Super said, please don't come to me asking me to write a check because I didn't say that. I'm using it as an example. You don't need my money right now. So.
I think that's so insightful. And I think that's also eye-opening because I feel like minority entrepreneurs to some extent, they feel like they have to have this cookie cutter persona to avoid being seen as unprofessional or, and so the brand, understanding your brand independently of your product. And so it's interesting that you say that. So sometimes there are times where you're not necessarily the full evaluation isn't based on necessarily the product, but it's based on you being attached as the face of the brand for that product and the growth and the loyalty in connection with the fact that you're connected. That's
and not just that, your know-how, your professionalism, and what you're willing to learn. Remember, I said earlier, you got to be coachable because you could be the best damn lipstick maker in the world, but if you are stubborn and on it, like you don't want to listen to an advice from the investor or anything, and just no, I do it my way. Investors are not going to want to be bothered. They're going to be like, oh, they're difficult to work with. I'm going to keep my money to myself. So they look at the whole person. They look at the leadership. They look at how you're willing to get help and where you're willing to step back and let a professional step in. Like I always tell company, and this is kind of deviating a little bit, but my clients that I work with, because I do business growth strategies, it's you got to be in the mindset of in about 18 to 24 months, I need to be ready where I'm going to step back and turn the reins over to people who are smarter than me, let them run the day-to-day. I'm just going to be the CEO of the company, and I'll have the bird's eye view of what's going on. All of the important decisions will come down through me, but my team is smart enough and they're skilled enough to make the decisions on the day-to-day to run this business. If you can't get yourself to that as a business owner, if you can't get yourself to that mindset, that frame of mind, you're going to be hard to coach, because you're going to always think, I built this, I made this, it's my baby, it's me, 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 me. No. Disassociate yourself personally from your business and your brand, so that way, even if you're not there, it continues to run on without you. That's the kind of stuff that investors are looking for as well. If you're the person, if they're betting just on you, then chances are you probably won't get an investment. It's the whole total package.
That's definitely brand. It's so interesting you say that, because Steve Jobs has been passed away for years. Mm-hmm. And so we attach, even now, Steve Jobs to Apple. Mm-hmm. However, Apple has evolved even since his past. And I'm pretty sure he wasn't specifically involved in every modification or new innovation Apple is now taking on. So it's a situation where you have to be able to step back away from the logistics to develop a brand attachment, especially if you are your brand, right? Or you're the face or the whatever attached to that brand, so that people can now start to develop that loyalty even when the head has changed.
Yep.
When the owner has changed, because as you scale, especially if you go public, right? Because that may be your exit strategy. You now have to be in a position where, like Jeff Bezos, he doesn't handle the day-to-day, but we still talk about Jeff Bezos if we want to talk about anything connected to Amazon's value. And
he's not the CEO anymore.
Right? He like completely stepped away. But they're like, Bezos makes this every hour, every minute. So I mean, he'll be all right, but it's like, yeah, but it's other salaries impact.
And he's still getting paid.
Yeah. And so that is interesting. So you said within, you need to have the ability, one of the things that a business that is considering even having the capacity to be invested in by agent needs to have the ability to step back in 18
the leader months. Yeah. The leader has to be able to step back and make this a group effort, because even like with me, and I'll use Mogul Chase as an example, I know that I've gotten it so far, and I know that the visions that I have for it down the road, I possibly am not that person to get it there down the road. So when it's time for me to sit down, and I haven't said yes or no whether I'm going to go for investors for myself or whatever, I'm still wrestling with that one. But the vision that I have for it, I can't get it there. I'm not equipped to get it there. And I'm smart enough to know that I'm going to need to bring in other people to kind of enhance that and build that and take us to that next level. And as an entrepreneur, you have to be willing to do that. You have to be willing to share the toys, so to speak. You can't just hold everything so close to the vest. Yeah, you might have started the company. Yeah, it might be based on your intellectual property or your skill set, but that's when you start knowing, okay, I want to take my company from here to here. Who do I need to get to take it to here? And be willing to bring those people on, as opposed to be like, nope, I'm the CEO, I'm the boss. I know I had a friend of mine, she would tell people who would interview to come work for a company, like, if you think you're going to be CEO of the company, I need to take that out your head right now, because the buck stops with me. I'm always going to be the CEO of the company. And I was like, that is such the wrong attitude.
Yeah, you've already put an expiration date on the lifetime, the life of your company.
Right. And your employees, because they're going to feel like, well, I'm capped. I'm not going to be able to go anywhere. So I'm going to start exploring other options in a couple of years.
They're going to prepare to create their own CEO. So yeah.
Absolutely.
I think that's so funny. And you saying that also alludes to people having to have the capacity to comprehend that that's a moving piece of generational wealth. Yep. Generational wealth means this, whatever you're investing in as your avenue to create it, has to outlive you.
Yep.
It has to be able to be and generational, not just a generation down, right? It means that your grandkids, great grandkids, great grandkids have to have the capacity. Somebody has to have the capacity to constantly keep it going or evolve the vision for it. And that
look at
requires you to
Heinz.
have the capacity to step back.
Right.
You know?
Look at Heinz, Johnson & Johnson, Kraft,
Ford,
Walmart company. All of those, we got to look beyond just us. And I know this is a whole other conversation, but we need to look beyond us. And not just generational, even in the now, like if I wanted to go away for 3 months, I could, because I have a team in place that can handle things for me. Not many people can say that. Many people are like, 3 months, are you crazy? It's not even just a matter of vacation. Look at natural disasters. Look at COVID. Look at the hurricanes that have gone through that disrupted business. You got to set your business into a way that it can function with or without you, ongoing, in perpetuity, to the next generation, to the next, even transition over to your children, to the grandchildren, however it is. And a lot of us don't have those conversations. We want to talk about, we want to make money, or we want to build. I'm a 7-figure entrepreneur. I'm an 8-figure entrepreneur. Okay, but if you stop working, will the company still be sustainable?
Exactly. And can it be built on with the evolvement of time? Like, FICO, one of the things we do, we educate on credit. We don't necessarily care to do repairs in-house. We're quick to outsource it, but we are really adamant in just providing education. And so in that situation, it's like, well, whatever your industry is, it's evolving. The metaverse, right? They changed their name from Facebook to Meta, and then now, NFTs was kind of peeking through, but now they're talking about, buy, you need to be buying your digital real estate now before you in the slums, in the digital world, and that it requires for somebody to have a post of 5 years down the line. We started a pandemic. Wasn't nobody really talking about the digital world to that extent. But now everybody was in lockdown for several months. They needed the ability not to feel alone. They needed a way to still be able to connect. And so the virtual DJs, the verses, like multi-billion-dollar brands were established in the midst of the world falling apart.
Absolutely.
Just because they had the ability to keep people connected, because people realized, I thought I hated people, but it turns out
I miss people.
I hate having to actually speak to people, but I need to be around them. I need to know that they coexist with me, that I'm not alone. So the evolution will require that. Like sometimes you just don't have the forward thinking within yourself to understand. I remember when hashtag happened, I was like, no, that's the pound sign.
Yes.
I was like, I don't understand. Hashtag what? It's a pound sign. Why are people trying to reinvent the wheel? So like sometimes you have to have somebody that has that capacity to adapt to, okay, this is how this is what's happening. This is what's trending.
Absolutely.
And normalize it without the.
And here's the other thing. You brought up NFTs and digital real estate and all of that. Please, y'all, please. There's so many people on Facebook and Instagram, all of that are giving this knowledge away for free. Do a Google search, learn that stuff. I have my little Brooklyn property for Upland. I don't remember what I paid for it, but it's the virtual thing or whatever. And I love the fact that now, like and hate, the fact that celebrities are now talking about it. Like Snoop Dogg talked about how he got his virtual property and he's selling land all around his virtual property and all of this other stuff. Don't look at it as a phase. I'm 52. I'll be 53 in April. Very, very proud of my age. But Gen Xers and older, we got to be with the times. Pay attention, because these young kids are making money on these NFTs and this virtual property and all of this other stuff. Take the time to get to learn it. Just like you learned about options and trading and Forex and all that other stuff, learn this too. Let's not discount the younger generation, be like, it's just a fad, what they going through. They said hip hop was a fad. I'm 53, 52 years old, still listening to it. So be part of it. You don't want to get left behind. And I'm not endorsing anything. I don't teach it. I'm still learning it myself. I'm just saying, don't let an opportunity to make money slip through your fingers.
Facts. Like when the dollar homes, it's so funny you say that. And I don't want to get too far. Well, it's fine. I'm gonna crop it down anyway. But
okay.
It's like when the dollar houses were having in the hood, where the Department of Housing Authority was just trying to give away the stuff, and people didn't understand the value, and then somebody else bought up some stuff, and the next thing you know, you see it go from being $1 or $100,000 to like now it's worth $3 million. Yes. And you're like, okay, well, it looks like I can't afford to be here anymore. So it's definitely that they're already talking about $1 million digital real estate acquisitions transpiring. So it's just gonna get, between inflation and the fact that people need to prepare for what if something even worse than what happened 2 years ago transpired. They need to have an outlet. And so it's, interestingly enough, it's funny you said Snoop Dogg, because Snoop Dogg just bought Death Row Records. Well, one of the first things he did was take it into the metaverse, where now the whole record label will have exclusive content, exclusive performances from their artists, and all these things that are only accessible through the digital world. And so even 2 Chainz was talking about being in something, and he was like, I forgot I recorded this concert, and I'm watching myself perform in the metaverse. I completely forgot I did it at the beginning of the pandemic. So
yeah, we can all do that. And I have an attorney friend of mine, and I'll ask if it's all right to share in the group, if she's all right with me sharing her name, but I'll put it in the group later. She's an attorney, and she's switched her focus to help businesses develop NFTs for their business and create content for the metaverse. So even attorneys now are starting to see the value in, oh, this is a new level playing field that we need to worry about for businesses. I never thought about an NFT for any of my businesses. I never thought about anything for my business in the metaverse. Now I am.
Yeah, I know somebody that just I know 2 people that just released it, some limited NFT. I'm just trying to understand how to put the value.
Right.
I'm definitely,
so I don't know that yet.
Like a 3-month hiatus just to deep dive in my comprehension of it, because I realize there's a lot of equity power there. But I think and I feel like it gives a level playing field to being able to establish a brand that transcends you, right? Where even content you already possess now has the ability to live on way past you. And even there may be ways to release it and things like that. So I got a lot of deep dive, and I plan on doing that myself. So I think that's
I'll be curious to see what you learn. I want to know too, because I'm like, hey, I don't leave any opportunity to get any money on the table. So yeah.
And I feel like it's so funny, because this metaverse thing, I haven't said this out loud to anybody, but the metaverse is making me think about it was a movie. I cannot tell you the movie name, but I remember there was this movie where this guy was in this like virtual world, and he was doing all this stuff. And so somebody went to go track him down, like in real life, because they were like, oh, he's a problem. He's a huge problem. And they went to go track him down, and it was like this, I mean, barely mobile, super morbidly obese guy in a like, it was like this crazy custom wheelchair thing. But meanwhile, in this virtual world, he's like at the center of everything.
Right.
And in real life, his whole identity is now built around this headset. He just keeps on 24/7. And so I think it's a leveling factor where people that possess skills, possess knowledge, possess know-how, but they may have it's a leveling. It puts a leveling playing field for people with disabilities or social inequities or any type of personalized struggles to now be able to redefine what the packaging that corresponds with what that skill or that knowledge or that information or that resource is, in a space where if you just execute, and quite honestly, if you do it in the most timely fashion, because that ends up being the thing. The people who do it the earliest have the ability to have the fastest reach the quickest.
Absolutely. Absolutely. So, and I will say one last thing about the metaverse though. I think we, especially Black people, Latinos, need to get into the space in droves. Stop being so hesitant about it and suspect things and always make judgments about it or whatever. But by the same token, and this may be my 52-year-old self talking, but I think that partially it's a way to make money, partially it's a way to distract us from the everyday what's going on around us. So I would say get into it, learn about it, so you don't get distracted by it, keep it in perspective. Like, I know the virtual real estate that I own, I don't own that in real life. I own it virtually through the metaverse. I can't go to this address and knock on the door and be like, get out my house. Keep it in perspective. You can still make money, just keep it all in perspective is what I would caution. And the final thing I would say is back to the investing, the angel investing thing, is learn how to become an angel investor. Even if you're not ready to be one yet, if you feel that your business is on a trajectory where you're going to make a lot of money, or your job or whatever you do, that you're going to make a lot of money and you want to support Black business or women business or Latino business, whatever, angel investing is a good leveling of the playing field. Because up until maybe 5-10 years ago, it was more predominantly 95% white males that were getting it, or Indian males getting it. We have such an opportunity to not just get investment, but to be the investors and give these companies an opportunity to shine where they wouldn't before. Because honestly, I think the biggest amount that a Black woman-owned business has ever gotten was $1 million. And that seems like a lot to some people, but it's a shame because there are mediocre white boys out there that are getting $5, $10, $20 million rounds of funding. So we need to be very cognizant of our ability to be able to fund companies, and we need to be able to encourage these companies, because a lot of us, if we don't see anybody that look like us, we're not going for funding. We're going to stick with, oh, let's look for a grant, let's look for a loan, whatever, and we're going to miss out on opportunities. Right. So definitely, if you want to become an angel investor, learn how to do that. There are plenty of programs out there. Pipeline Fellowship just closed down, but there's 37 angels. They teach something, but they teach mostly women. I teach women of color how to be angel investors. I do it once a year. When is it coming up? April or May? I don't remember, but it's coming up and that'll be on my page. But learn how to become an angel investor, invest that money, and then don't jump into it on your own. Find a group that is willing to invest together, because first of all, you can put a bigger pool of money together. And second of all, you can invest in more companies that way. So that's a conversation for a whole other time.
I love that. No, because that is kind of where I'm at. Where it's like, I don't want to work. Like, I want to have huge impact, but I do not want to work. Right. And that does not mean I want to sit on my hands all day. Right. That means I want to figure out how to be an effective resource in the ways that are most efficient to those that I can invest in. Right. And so I love the fact that you said that, because for us, we started the first about Black Market, but now we have 2 events, the Small Business Expo, because it's like we were looking for resources in our own community and it was hard to find them. And I'm like, there's only so many hours in a day and so much time I can commit to developing a new skill, getting a new license, getting a new certification,
we talked about that,
and so it's like, well, I'm open to investing in somebody else to become that resource. And so, and I think the investing, it has different levels to it, where it's like, okay, well, it may not be investing just because you see the value in this business model. It can start on smaller levels. Like, hey, we need real estate inspectors, Black real estate inspectors. We need Black and real estate appraisers, right? Like the areas where our community talks about being the wealthiest. It's like it still doesn't happen in isolation. There are a lot of moving pieces that allows for it to be combated or negatively impacted as little hiccups and roadblocks unnecessarily. And so sometimes it's like, all right, we just need to get somebody in the community that's doing this, that can be that source in that way. And so the investing may be just, oh, let me get you with the right people to possess the full qualifications needed for you to step into this role successfully and sustainably. And at this phase of our lives, right? I'm only 30, right? It's like I'm just years into an established professional pursuit to any extent. And it's like, I would love to pay somebody to learn how to handle dumpster rentals. I would love to pay somebody to just, oh, you interested in a new profession? You don't know what you want to do? Cool. Have you considered this? Look, we got 15 different roles. That if this is something you genuinely have the desire in pursuing and even growing in, we ready to line you up with everything you need to go full force to become this. Because not only will you then become something where you remove the ceiling from yourself, but you are now our resource, so we don't gotta go tracking people down or wonder if the red tape is because they have a problem with the person requesting the service or the product from them. Instead of it being like this is an actual issue in the industry.
And we Black folks have to be willing to pay money to get the certifications and the training and the help and the consultancy or whatever that is out there. I'm not a big fan of piecemealing free stuff. Free stuff is good, don't get me wrong, but sometimes you got to pay to get in some of those rooms.
Exactly. Talk about it. And it's so powerful. It's so funny you say that because we're doing a mastermind this weekend. So we're gonna wrap this up soon because I feel like I was like, this is gonna last 30 minutes, girl. No. But we're doing a mastermind this weekend. And for us, we initiated this mastermind because we do these events, but it's like we really don't have the ability to connect to the extent we wanted our events because we are responsible for everything. The bigger it is, the more moving pieces that you have to handle. So even if you see me, I ain't really present. I don't see everything going on with you. I just see the things that I need to have a heightened awareness about. Are you doing this? All right, hey, you're not going to be able to do that because of this reason from the bigger picture. And so we find ourselves meeting people that it's so funny. We went to 2 pop-up shops last weekend. Okay, went to 2 pop-up shops. Just because I was like, I'm going to be intentional. It's a new year. I'm being intentional about just making sure I connect with more of the community. Second pop-up shop was being hosted at a venue by somebody who participated in our very first event last year, right? Didn't recognize the face. Didn't recognize that the logo, mind you, we see their logos and their company names 50 times just in the registration. I was like, it looked kind of familiar, but I meet so many people. We had between over 1,200 businesses involved between the 3 events. So, sometimes you're like, maybe I'm tripping. Maybe I just seen it on Instagram or something real. And so we're talking. She was like, oh yeah, I was at that one in April, and then it's a situation where it's like, we're coming back full circle. And now I'm talking to her about a strategic partnership for something that we haven't even rolled out yet. And this was just to kind of get a feel of who it was and see if there was even a possibility to ever do business together. And it's like, you've been in my backyard the whole time, but I didn't have those masterminds. Those masterminds are those spaces where you genuinely have the unrestricted ability to connect and to build with not just like-minded people, but people who are ready to execute. And the money typically, right? So we're doing it free. We're doing the mastermind free, but we're doing a VIP dinner afterwards. And the reason why we're charging for that. And a big reason why we're charging for that, not just the food, but because there's high level stuff that you have to have the capacity to invest in for you to even be a part of the conversation. Absolutely. If you think $50 or $100 is overwhelming, well, when you got to pay $5,000 just in docking fees to get something from China to Cali, and you live in North Carolina, and it still got to make it to you from, it's gonna make you cower and be like, I just go to Walmart for the little quantity I need. But that little quantity you need from Walmart is what's has you only been able to be competitive with people who are willing to spend $30 for a shirt or for a t-shirt or some socks, right? Because your profit are horrible. Exactly. Versus you being able to wholesale this and get it in 5,000 small Black boutiques throughout the country. You can't handle the volume, you can't handle the demand because your cost of acquisition is so far out of reach. You think an investor is going to help when in all naturality, you got to be willing to invest and access to like minds, access to people who are willing to pool their resources with the same goal or a similar mission as yours.
And not for nothing, but like our white counterparts, it's nothing for them to write a $50,000 check to go spend a weekend at a conference or mastermind or high level, C-level kind of thing. And we look at that as pretentious or like, oh, that's unattainable. My mastermind is $10,000. I'll just put that out there. I do a CEO mastermind. It's $10,000, but you're getting access to my brain and the brain of other people around you. And we're brainstorming, we're strategizing, we're putting out plans, roadmaps, everything, giving you the resources you need. And a lot of people don't understand that when you're building a business, it's not as simple as just Google it. Exactly. Because you're not going to find everything you need on Google. Yeah, you'll find some resources, but like that impact, like getting in those rooms, like I mentioned way back earlier, to get in those rooms, you got to be willing to write a check. And you're getting in rooms that's going to give you access. It's like the equivalent of, say, being an alum of Harvard or Stanford, that kind of level access. Those people that go to those schools, they're not going there to get those degrees. They're not going there to learn. They're paying all that money to make connections.
Exactly. Because you're now affiliated to everybody that they're affiliated, right? So in the event you need something, you're talking about, I say the most valuable thing from college were the connections I intentionally made. I got a good friend in LA who I was like, hey, we're talking about this 900-acre community development ground up. And he was like, oh, I can get the license. He said, Cali has the hardest license. I can get the civil engineer license for North Carolina, and I'm definitely available. You understand? There's power in being able to mobilize people for whatever it is. Like you now, by doing masterminds, and that's why I love them. That's why I really love them. And now I'm trying to kind of pull back the veils slowly, because a lot of our community, we don't know what we don't know. So when you hear this high ticket price and you don't understand the tangible, right? Because more than any other community, if we're being honest, Black people have been conditioned that success, financial accolades, financial progression, it has a look to it. It has a wardrobe, it has an accessory, it has a car attached to it, right? That is how you feel your influence versus it having impact.
It's more about the outward stuff as opposed to the stuff that you need intellectually or in here. And the thing about it is, I'm very strategic about who I network with and what groups I get associated with or whatever. I tell people all the time, I ain't finding people on Facebook. My clients ain't on Facebook. Some of them might be hiding and not really, interactive with the groups or whatever. But a majority, I would say 90% of the people on Facebook is not my demographic. And I can tell that based on two things. They'll ask me, first question out their mouth is, how much do you charge? That's the wrong question. You don't ask how much you charge, because if it's something that you really need, if your child needed a specific medication and you know that this was going to save your child's life, are you going to ask how much the medication costs? No, you're going to find a way to find the money to get this medication. Second thing they ask me is, can you just give me an example of what you do? No, not what I do. So yeah, we have to retrain our brains to start thinking. These multimillionaires, they're asking a different set of questions than what people who make just a living salary are making. we got to get in those rooms. Sometimes it costs you to get in those rooms, but it's the return that you get on the investment. Like I joined a group and I think I was paying something like $500 a month to be a part of that group. It wasn't the features of the membership. It was the connections that I made that helped me to now I'm working on getting a streaming channel. Now I'm working getting my magazine out. Now I'm getting, so many other things happening that because if I didn't have those connections,
you'll be
Adrienne herself wouldn't have been able to do that. So I'm glad I paid the little $500 a month or whatever. And some people may be like, oh, I'm not paying that much to be part of no group. You got to make it work for what you need.
Exactly. It's intentional connection.
Yeah.
Like when people are willing, you're not investing in the dollar amount. You're not investing in like, what you're investing in those situations. That's low level investing, to be quite honest. You're investing in access to answers that sometimes you don't even realize you need to be asking.
Yes.
And that was the most powerful thing. I'll say I ain't inherit not a damn thing. No, I even those who loved me the most discouraged me. When the market was crashing, they was like, oh, well, my financial advisor said it's about to get worse. That's 08. It's gonna get worse than that. Why are you investing? Baby, Boeing is down to $90 and Boeing is a $400 stock. Apple then dropped to about $50-$60 and Apple is a $200 stock. Like I hear you and all, but I ain't listening to that shit. Right. Like, I'm definitely putting this money here. Oh, I just put another 3,000 in the day. Oh, I just put and it's because it's like the world has not, like, Jesus ain't here. Like the market wasn't crashing because like somebody seen Jesus return and walking down the street or something. Like it crashed because people weren't exactly sure, what does this lockdown mean?
Right.
Like it wasn't due to like all these banks fake printing money to make real estate seem more valuable. It was like, oh, I don't know, the next time I'm gonna get a check if I gotta stay at home for a month. It was that insecurity. Well, let me take whatever I can muster up and grab together real quick so I can make sure I can survive through this instance. Because nobody has an end date set.
Right. And see, for me, it was like I didn't survive the pandemic. I thrived in the pandemic because survival mode is kind of like equivalent to living check to check or worrying about how you're going to eat or pay your bills, whatever. And another thing I tell people, we're going way over time, but I got to share this one more piece. I tell people when they talk about how much something's going to cost or how expensive something is or what is the price of something. No, what you need to be worrying about is what do I need to do to make the money to be able to afford this? That when I learned how to switch that thinking, and I was a single mom at the time when that light bulb finally came on, my life got so much easier. It's not easy in the terms of like I'm living on easy street, but I was able to navigate the world better. And I understood what I needed to do. And it was no longer me putting my fate in someone else's hands. It was me taking the ownership. Like, I know I need to make the money for this, not, oh God, taxes are going up. Okay, what do I need to do to make more money so that I can be able to pay whatever I have to pay? Just that little switch makes a lifetime of difference.
I'm gonna tell you, and I promise I'm gonna cut it here. That is exactly what happened for me, where it was a situation where it was just like, oh, I heard this is going on. I don't know. I got to a place where I was just okay with showing up, even when I didn't understand exactly what I was showing up for. And in those moments about just being very, very intentional, I would get answers. Like, oh, well, what is the makeup? When I started my first company, which was a staffing company, and I was like, I just want to be the face of it. I'm not trying to be no paper pusher. It was supposed to be a partnership, and he was like, I can't commit to another company right now. I got a lot going on with my tech one. I'm not a paper pusher, and then it was like, well, it's be a paper pusher or have no money. And so it was like, all right, well, I don't know how this works. So I started it. I'm talking to people, I'm interviewing people, I'm hiring people. I don't know how I'm gonna handle your payroll. I don't know, and then it got to a point where it was like, I don't feel like I'm seeing enough. So I just started going to business stuff that will pop up. And he was like, well, your time makeup, like this random guy, he don't even know. He didn't answer my biggest problem, like in 3 sentences. Meanwhile, if I wasn't just there and being intentional, like, okay, what's going on here? Now, mind you, this guy owns an office supply company. Mm-hmm. He don't own a staffing agency. Mm-hmm. Like, but he literally went over one part of his business model, and that was the key to figuring out how to handle my business model. Right. And it becomes like the dollar value isn't always going to translate. I think I paid like $10 to attend that business event, like at a random church. And that one piece of advice brought me thousands.
There you go.
You know what I'm saying? And it wasn't like brought me immediate thousands. I ain't leave out the door like, oh, baby, look at that check. It brought me thousands. And because it helped me get a lot of my time back. And more than that, it connected me with understanding who I needed to be looking for to fill the part of paper pushing that was actually my weakness.
Right. Hire your weaknesses.
So
always. I have so enjoyed this conversation. I'm glad you invited me.
I'm so grateful. And I gotta get this because baby, I'm gonna be, oh yeah. I'm using content in so many ways. It was so insightful. Hands down, listen. I knew I brought that's why I told you this. I said, I'm gonna have notes, you know. And for me, everything is like, okay, well, there are bits and pieces of this that weren't for me. There are bits and pieces of this that I know
pass through to others.
That is going to be like, hey, this is what you need to be thinking about as you prepare that franchise idea you're talking about. This is what you need to be thinking about as you prepare to put all that money in patenting it and creating this concept you have. So I appreciate it. And I'm just so glad that it was able to work.
Yeah.
And I'm so glad we did it earlier because it's 8:00 now.
I know. Well, anytime you want me to come back, you just let me know.
Yes, because next thing I'm looking forward to us discussing is how the VC world is going to collide with the metaverse. Because
I'll let you know when I find out.
I definitely see it coming with the value. So thank you so much.
You're welcome.